Hey, what's going on, guys? So this is going to be a recap for the trades of February 4th. What the trades were, they were Tesla and Crowd. So first things first, I want to go over the broader market perspective on what's going on here. Obviously, this whole entire range is a little bit sketchy within the NASDAQ, right? We potentially do have a distribution. However, range trading and not being biased to one given direction is very important right now, just because we have a lot of sell the rips and a lot of buy the dip opportunities for literally weeks on end here now. First things first, as far as structure goes, from a structural standpoint, what we have here on the NASDAQ would be you have your swing low, you have your swing high. They've been holding around the golden pocket area for quite some time. We had a really nice gap down to start off the week, right? So that's the first thing I want to talk about with QQQ is that obviously, as we know, we have a new week opening gap. That is a very, very vulnerable opportunity to think about obviously taking a long side trade. And the structure played out really, really nicely here throughout most of today and actually yesterday. So big time gap down, and that was obviously recovered with a lot of consolidation, as we could see throughout this afternoon session. And then that led to another really nice leg to fill the entirety of the gap. There was a little bit of divergent price action going on if you guys go over to the S&P, however, and you guys can see how we actually had a fill of the gap a little bit later throughout the S&P here today. Obviously, that's probably just due to some uh, sector weakness that has a little bit more weighting within the S&P than the Nasdaq. But bottom line is that this was obviously a little bit delayed in terms of filling the actual new week opening gap, right? So I figured there could have been a little bit of momentum and relative strength that we could trade into today just based off of this gap not being filled. Maybe a nice little push all the way into the 618 if you're looking at your wider perspective of structure. You're taking your swing high and your swing low. And you're looking at your discounted range from 623 to 602.50, right? So it's about a $2.50 range that we have here to deal with in terms of obviously flipping our bias. But yeah, that was just a really, really, really nice momentum indicator for me that this thing wasn't ready to completely tape flip just yet, given the fact that we've been building out these really clean higher lows throughout most of the week, right? And then we obviously filled the top of the gap up here on this black circle here today. So now we'll go over into the actual trades and why I like the actual trades. First being CRWD. So this was a call option trade. It was a very well planned trade, a trade that I've been eyeing up for a very long time. And there was a lot of relative strength displayed here, guys. Actually, right over here, whenever a lot of the leaders started to emerge within the software sector here on January 28th, right? And if you go to January 28th within QQ, you can kind of see how we didn't have the strongest of days, right? It wasn't a crazy day. It wasn't a horrible day. There was some relatively weak names on January 28th, but most of them caught really nice rebounds and moved their ways higher. However, Crowd was one that was really notable in terms of a plus 9% move here on the underlying. That's very, very significant relative to the rest of the market on this given day. And with that being said, what we did was we absorbed everything beneath us, right? So we had so many bear gaps left behind from the outage that we had previously. We had one there. We had one all the way up here at 368.50, right? And we consolidated off of that area for a very long time. And basically what we did was we had a gap. We had an immense amount of gap downs, right, to the point where this thing was obviously getting crumbled, right? That led to a lot of overextension, and once we started to formulate some buy-side structure on this and obviously get the reversion back to the upside, we filled a lot of those gaps, and we started to obviously use those gaps as a new support, right? So we kind of just staircased our way higher off of the gaps, filled most of the gaps, and then we got all the way to the top of the trend from where this actually started from, right? So we can obviously envision this is to be the top of the trend. I'll use as a little arrow. Obviously, the areas, the blank areas, are going to be your gaps, and we had a nice little gap here, right? And that gap, as you guys know, it was being really, really, really absorbed and based, right? So we popped above it, right? So once we got the pop above it, we got a multi-week base on top of that area and slightly beneath the previous high, right? So say this is your previous high and your previous all-time high all the way up here, right? And it led to the recorrection lower. What we did was we basically just based around here, based around here. We actually got a fake UTAD, pulled back down, based, and then eventually we got the really relatively strong day for crowd that obviously broke us above the internal range, which is all of this range right here, as well as the previous high, right? And this candle is right here, right? And it's resembled through a really nice leg to the upside. So whenever we're looking at this and we see how we have a previous high sitting right over here, we have a lot of gaps within this price action, and then we consolidate off of the top of a gap and we consolidate beneath the previous high, we can then theoretically say that this whole entire range of supply is essentially irrelevant because we had a major change of character within the chart given the context of how this character was on the leg higher, followed by a crazy amount of consolidation, right? And then once we obviously swept all of the liquidity off of the range and we got the relatively strong leg for that day with a lot of volume behind it, we got 1, 2, 3, and a 4 inside bar pattern here right off of the previous high, right? So we already know we have a really nice risk level off of this daily level on where the previous resistance was actually created from. And with the 3 inside bar and lower volume contexts that we have here that are all being engulfed by a very bullish looking candle, we could see this as potentially a gap and go type of setup here, right? This is also somewhat of a path of least resistance, obviously off of this range that we established beneath the previous high, right around here, right? And basically, whenever you guys are looking at this from a Wyckoff perspective, what it did was it based for multiple weeks and then finally got a sweep of the lower extremes, a breakdown failure, and then it led to a really nice rally higher, crazy amount of volume, obviously a very notably strong name, and all of the consolidation beneath this previous high obviously indicates that this high is no longer one to be anything super relevant or something that we should really worry about anymore. That means that there's really no stoppage within the trend, especially given the context of how this candle formulated on a really nice close above that, a ton of volume behind that, and then the 4 inside bars was just the icing, was just the whatever they say, the icing on the cake, right? So whenever we're looking at some similar schematics to this crowd trade, we could go over into something like D-Dog. We could go over into several different names. I'm going to keep the recap short and to the point here. D-Dog was a fantastic example of this as well. It's not the same looking schematic that we have from the crowd trade necessarily, but the concepts are very similar, and the dynamics of supply and demand tie in very nicely together on these two charts, right? This was a previous gap that we have left behind, right? And that gap was fully absorbed through with a lot of volume traded behind that. And then as you guys could see, once we obviously break through that range, that's whenever we have a really nice move to the upside. So we know the risk to reward is there. We know the upside targets are there. This was in an environment that had a little bit better of a market as far as long side exposure within tech goes, just given the fact that we had obviously the end of year type of rally going on within like November. That's whenever your options flows leading into the December chain are very strong. But this is a very similar schematic in terms of consolidating really nicely beneath a resistance to the point where once you actually test that resistance, there's going to be absolutely no sellers anywhere in sight, and they're fully absorbed, and we could obviously move up to the next level of price that has enough supply to push the name lower, right? So we go over into the Discord here now. We could take a look at the Discord and we could see how the Discord or the execution was in the Discord here. Crowd. I gotta look up the ticker. I typed too much here today, but so with crowd, okay, here, I'm sorry. Just give me one moment here. I'm a noob with this chord. I'm sorry. I gotta look for this. Alrighty, so I still own crowd. I was down 5% here at, we'll just say right around here. I was down 5% here at 10:04. Okay, so 10:04 in the morning, we'll go over to crowd and we'll take a look at the execution here real quick. Basically, what my whole entire thesis here, guys, was that we had a really nice red to green recovery back into the overnight gap closure, which was technically right here. And also what we did was we made these new lows that were pushing into the imbalanced areas off of this crazy move, right? If you guys have watched the bar by bar imbalance video, this is a crazy 1 hour imbalance candle, right? So whenever you can't, and obviously you fail to push above into the new highs, you obviously have to pull your weight lower into that imbalanced breakout candle to be able to obviously sustain a healthy trend back to the upside. So what we did was we took the high right here, we saw the gap down, and we saw the really nice recovery. And I was like, all right, this could be a really nice gap and go type of trade. So basically what I was doing was I said 10:04. So 10:04 was right around here. 10:05. Okay, yeah, so I had a decent amount of my average off of about 400. I was buying the wicks into 400. I bought some off of open. And I also, if you guys go into the extended hours, just so you could see every low, every high, you could pull swing low, swing high, and just start looking at like your golden pocket entry. And then what you can do is you could go to the regular trading hours and then obviously risk the Friday close area, which is also just about our Monday close as well, right? Or you could do the opening print. They're all within the same general area. This is basically my general range of risk, around 398 to 397, and I wanted to see a really nice pivot above 400. And if it's above 400, I'm not cutting the trade until we see the new highs. And we also have a left behind bear gap that was sitting right here at 408.70. So just by basic math, we could take a look at this and basically conclude that most of my ads are probably around 399 to 400. I have about a $4 risk, and with the upside reward, it's about an $8 or $9 reward, right? So it's about a 2.5 R, I would call it, maybe a 2 R. And you can't get the most perfect risk to reward in a market like this just because it's really rangy. So this was a really nice trade, and it had a really nice strong close. I'm swinging half of this right now. I was pretty heavy on this trade, and that's why I was saying it was making me pretty mad for a little bit of time. But this was just a really nice, smooth trade to the upside. And now we'll go take a look at Tesla. So with Tesla, this was a really, really, really tricky trade, but I've been looking at the red to green closure for the week, or just a fill of our new week opening gap all the way up here for a decent bit of time. And obviously we could see as that new week opening gap closure would be all the way up into 404.58, right? So what we were doing was we were technically trying to hold this gap around here. I'll mark it out for like a gray rectangle so you guys can see it. Well, green and instead of gray here. This is a really nice depiction of basically where the daily support was actually trying to hold off of, right? And then obviously the new week opening gap down is what took us beneath that. However, what we did was we stop rated a lot of people. So you guys got to think in terms of where price is obviously facilitating towards, there's going to be a lot of stop raids off of that general area. Would I have liked to see a sweep of this low on this red dot right here at 373.04? I totally would have, and I probably would have ended up putting a lot of my port into this one. But we have obviously a really nice hammer looking candle here. And then basically what I was looking for here, guys, was this one to simply just hold all of these daily lows that were sitting that were actually stop rated off of. That's why I said on my tweet, that's why I said in the plan, on the chart I posted, in the scan, everywhere, on the pre-market prep. You can check all those channels. I said 385 control is very, very big here. You don't want to get too zoned in on a small time frame. What I was more or less doing was looking at this hourly. And what we were doing was we were just consolidating on this ever so slightly beneath that level with a failure of obviously displacing lower beneath that level to the point where there was a buyer floor, there was a bid floor around this area that was telling me, okay, yeah, we definitely need to retrace a little bit more into the gap. So when we go into intraday execution, I also gave this one out in the channel, but I was adding mostly throughout the day here and just stopping out, right? So I took some off the open. I caught some of this wick. I caught some of this candle, and then it popped all the way into 390. And I was like, all right, we got to go break even stop here because the trade is essentially only valid over 390, right? So this is technically the part of our unfilled gap here at 389.17. And then we got a big rejection bar off of that area with a lot of wicks off of that area. And then we just pulled back and I stopped out break even. However, what we did was we took out the current day's low and we started to hold it, and we just started holding those higher lows and formulating a really nice base here. So I was like, all right, you know what? Fuck it. I'm going to add this one, right? So what I did was I added this one right here. SPY short, very tight risk. I want to stick with my CRWD, MCD, and MO. I added next week calls again on Tesla. You don't have to do this, but I think we've got the sell climax today. That was at 123. Not all my entries are timed perfectly in terms of like, I don't like just immediately type my fill. I have to focus on my own trading, and this is something where I don't provide alerts that consistently. But I was just basically buying around 385, and I was looking for 385 to be controlled into the close for a very strong close. And then that's exactly what we got, right? So basically, the whole entire ideology around this trade here, guys, was the fact that this one has just been basing really nicely around this area. We have a big time gap to obviously press upwards into to collect remaining supply off of that area. We also had a lot of volume on this gap down candle that was hourly hammer bar, right? And then we got a lot of volume towards the lows of that day, as well as this pop here, as you guys can see throughout yesterday's trading action, right? So obviously, with that being said, this could have been a fantastic trade. For the upside, right? To obviously go fill the gap. That's why I'm holding half size here. But basically, all this is really basically all the trade really comes down to here, guys, is we had a lot of wicks on the daily chart. Two of these right here, that's a sweep on liquidity. We also had this wick right here and this wick down here, right? And we took out one, two, like three, four, like 4 trading days of likely stops, right? To be able to get their hand and accumulate, right? And the risk reward's fantastic here because if we think about this from a perspective of what's our reward versus our risk, we were looking for like a 385 control, right? Or just basically, you could also just take the bottom of the gap, right? The bottom of the new week opening gap. And if you guys go into the 15-minute, basically what we did was we pivoted right off of that into the closure. I was just looking at this one as like a trade to give a little bit of leeway for just because I want to see like the close is more important than the open in throughout the afternoon session. So I just wanted to see simply how he closed, right? And the close was fantastic. So I might roll profits if we could get a slight little pullback after a gap up. And I think that this one could be a really nice trade to target the upper gap area. But aside from that, guys, I mean, this was just a really nice trade here. And one more thing I would like to really say about this chart that added a nice amount of conviction for my trade was the fact that the earnings candle itself here, guys, it gapped up and then it sold off and then it basically just consolidated throughout the rest of the day. And then the following subsequent day, we got a really nice pop and a really nice rally. And that pop, it was of decent volume. It wasn't anything crazy, but it was a breakout failure, right? So we had a breakout failure, and then obviously that breakout failure will be reevaluated once we fill some of the imbalances and then maybe get a lower high, and then this could start looking like a distribution, or maybe we just completely melt through the range and then hold it and then eventually break out. I don't necessarily know, and this is a smaller time frame trade, right? So fantastic opportunity over there. As far as the rest of the positioning goes today, I'm still in my MO swings. I really like the risk levels here. I really like the chart here. I think everything looks good for this one to get above this resistance here at 53.47 and eventually start targeting into 54. And the premium's fantastic here. It's relatively cheap. You don't need a lot of size here unless you're trading a ton of time. I also do have commons on this one that I added here on Friday and a little bit more on Monday here. So I have about a 52 cost basis here for MO. Not the craziest thing in the world, but not the worst. and I'm basically just looking for like a medium-term swing trade on this one. So that and McDonald's are my vehicles for the long side trade. McDonald's, they have the report February 10th. However, this looks like a really nice undercut of this support, as well as an undercut of these two relative equal lows here on the daily chart. Really nice daily support undercut. And what this did was it pushed into the gap fill, and then we obviously got some sort of discounted higher low off of that gap fill. And then what we did was we popped back above the daily support that had a fake breakdown technically into the gap fill. And then we got a really nice strong day. We pulled back, and then we got another really strong day here with the general market gapping down, and this one being a really strong outlier type of action here that we had on the day that the S&P gapped down horrifically bad on. So that's McDonald's, that's MO. SPY short, basically all I really did here with the SPY short today was I bought in off the NWOG fill, and I was like, all right, this will be a decent little hedge to the rest of my trades. I bought like 7 days till expiration and a little bit of like 13, I believe, and I went decently green. I caught about $2.50 on the short side trade, and then it just fizzled out and did nothing. But I put stops break even. We talked about that. All the execution and risk management was relatively clean here today, given the fact that you can't be perfect in action that trades on horrifically low volume, right? The S&P actually traded horrible volume today. So yeah, that'll be it for the recap. If you guys have any questions, feel free to ask me. But all this trade really came down to was the breakout failure, the earnings bar itself obviously being a failure to push its way back higher, and then we got a gap down, and then basically what we did was we pivoted off of like the earnings candle low, and this was a really nice dip buy to obviously test a little bit more into that new week opening gap, right? Very simple here, guys, and this was a 40% trade on next week's calls. I don't do any weeklies with a high conviction trade like this that, where the crazy Greeks exposure can really mess you up and shake you out of a trade. So yeah, I will see you guys later.